Hello, everyone, and thank you for tuning in today. You know, it seems like times have been really hard for everyone these past few years with madness after madness happening in the world. But in a time, no one has been hit harder than the traditional family. There are so many things, so many attacks on the family, whether it be, woke education systems, increased violence we've seen around the country, the threat of even possibly a World War III, you name it. But most immediate and pressing threat has been the financial and economic crisis that we've seen over the past few years, which is really straining families in a lot of ways. So joining us now to talk more about this is financial consultant Dr. Kirk Elliott. How are you today, Dr. Elliott?
I'm doing awesome. How are you doing?
I'm doing very well. Thank you so much. Yeah, we wanted to talk to you about just some of the things, some of the recent craziness that's happened, especially when it comes to the banking crisis. Can you break down what exactly is happening with some of these banks that we're seeing that have had all these issues?
Absolutely. And to do that, I'm going to take a step back into history a little bit, because it'll actually help better explain what's going on now and what's to come. So normally, how banks operate, when you deposit money into your checking or savings account, most people have this impression of banks that it's like the safe haven place where you have this picture and this image of a bank, whether it's from the movies or whatever, right? Where marble staircase, and they got these big, huge marble pillars, and you go in and there's a big steel round vault door, and you open it up and stacks of $100 bills just come flying out of it, right?
Mm-hmm.
Not reality. In fact, it's opposite of that, because when you put money into a bank, what you're doing is you're giving them, it's a security instrument. It's basically a promissory note saying, hey, bank, here's my money. Do with it as you wish. And then hopefully it's there when I want to pull it out and write checks on it or whatever. That's really what you're saying, right? And so what the bank is hoping is that not everybody comes back at the same time to get their money out of the bank, because it's truly not there. And what's interesting is I've got tens of thousands of clients all over the world, right? And they'll call me and say, Kirk, I heard you on TV, or I heard this other podcaster, and I'm out of the stock market, I'm out of the bond market, I'm sitting in cash at the bank, I'm riding this one out. It's like, okay, kind of a silly notion, because what do banks do with your money? It's not that vault with a bunch of hundreds that fall out of it when the door opens. They are investing in stocks, bonds, mutual funds, real estate companies, just like you would. So you sold that stuff, think you're sitting in cash, when in reality, they're doing the same thing that you just got out of. You didn't change anything, right? So if investments are coming down for you, investments are coming down for the banks as well, right? So we put that into perspective. But then the way that fractional reserve banking works is, if you deposit $100, they'll lend out 90 and they'll keep 10 back, for those checking account deposits and everything that they need done. Well, that's called the reserve requirement. So if the reserve requirement's 10%, the bank withholds 10, and then they lend out 90. And of that 90, they'll hold back 9 and they'll lend out, 91, right? That's what the reserve requirement is. Well, in the summer of 2020, actually in March, they changed. Right in the height of COVID, the Federal Reserve made it's called Regulation D, where they changed the reserve requirement to zero. Banks don't have to have any money on hand at all, right? So that makes them ripe for a huge bank run. Because if there was some kind of bad economic news, people felt like their assets weren't safe, they're going to go into the bank and they're going to start to pull it out. Well, shoot, there's nothing there. Technically, they don't have to have anything there, right? So this is the problem that we have. Now, if you go back to December of 2022, the FDIC, which is the insurance on your bank accounts, right? They met. They had a meeting, and in the meeting, it was like one of these videos that somebody in the audience started recording. I don't think it was supposed to be a recorded session, but it got out, and for good reason, right? So what? Because the meeting kind of got recorded midway into a sentence, which tells me it's like, okay, there's some juicy stuff here that somebody thought that they needed to record. Well, what were these FDIC officials saying? They were at the front of the room. at their big long tables and saying, we can't let the public know about this, right? We can't, there's going to be unintended consequences. And boy, we don't really trust ourselves. But yet people trust the banks, but we don't trust ourselves, right? This is the conversation that's going on. It's like, what in the world are they talking about? Well, sure enough, they're talking about how banks don't have an awful lot of cash on hand, and there's very little there. And the FDIC is completely underfunded. They only have 125 billion to actually backstop about $18 trillion of deposits. It's less than 1%. So when you think you have $250,000 in insurance on your checking and savings account, oh, no, you don't. They don't even have 1%. They've got 125 billion to basically fund $18 trillion of checking and savings accounts.
Wow.
So this is the problem. This is what they didn't want people to know. Because if people knew about that, they'd go in and try to get their money out of the banks. Well, nuts. Banks don't have money. So therefore, it's like this self-fulfilling prophecy and could cause this contagion effect. Well, this is what happened with Silicon Valley Bank a few weeks ago, right? So on Thursday of that week, a few weeks ago, nobody knew anything was going on with their bank. Friday, it goes under, right? And it's like, oof, went into FDIC receivership. So Silicon Valley Bank had 173 billion dollars in checking and savings accounts. 173. How much of that was uninsured? Meaning, how much of that was over the $250,000 threshold that you get FDIC insurance on? Number is 152 billion. So of the 173, 152 billion was uninsured, meaning those people just lose their money. Wow. It just goes away. But because FDIC is supposed to cover it. Well, FDIC could technically, because they have $125 billion in assets. What's the difference between 173 and 152 of that was the uninsured amount? Well, that's 21 billion of FDIC's 125 billion went away just with Silicon Valley Bank. 20% of all the FDIC assets went away with one bank. It wasn't even a huge bank. I mean, it's big, but it's not JP Morgan Chase size. It's not, they don't have trillions of dollars of assets. But here's where it starts to get a little bit squirrely. Because what does Silicon Valley Bank do? Last year, they were 44% of all venture capital funding for tech startups. 44% from one bank. That's their shtick. That's what they do, right? So you've got all these tech companies that are starting up, and in this current presidential administration, the economy is horrible. People aren't spending money. Wages are going down. Inflation is persisting. So they're starting to need some money. Right? They need equity lines of credit. They're just starting to withdraw capital from the banks. Well, the bank didn't have it. So why do banks go out of business? Because they run out of money. Simple as that, right? So that's what happened. So then the contagion started to spread like the same day, because the same day, Silvergate, which is one of the largest funders of the cryptocurrency world, went out of business. They went into FDIC receivership. This all happened on a Friday. Monday, over the weekend, then Signature Bank went under. It's like, oh my word, this contagion is spreading, right? So the emergency response to that was Janet Yellen, the Treasury Secretary, was basically parroting the talking points from a meeting from 8 years ago. 8 years ago, in response to Lehman Brothers, the G20 nations met in Australia and said, hey, no such thing as too big to fail. We're not going to bail anybody out. We're not going to bail. I mean, if we get another Lehman Brothers type of scenario, this isn't going to fly. So they decided back then, 8 years ago, that they're not going to do any bailouts. So what did Janet Yellen say, Treasury Secretary, on Friday when Silicon Valley Bank went out? Here's the paraphrase of her quote. She said, hey, SVB depositors, have hope, but we're not bailing you out. It's like, what? It makes zero sense. It's like, why would we have hope if you're not bailing us out and our bank just failed? Right? So it's because she lied. I mean, she never had any intent of actually having that be the truth. Because over that weekend, what did they do? They bailed out everybody. Even the uninsured portion of Silicon Valley Bank, they bailed out. So then on March 15th, it's another about face. She actually said, hey, any other financial institutions that go under, we're not bailing you out. Okay. So first bailout, then no bailout. And then on March 21st, she had a meeting at the American Bankers Association where she addressed them as the keynote speaker. And she said, no worries, America. The government is going to backstop all deposits in America, small banks, big banks, every bank in between. $18 trillion we are going to insure. We've got your back. It's like, what? Bailout, no bailout. Now they're just going to cover everything under the sun. It's like, what's going on here, right? Either she has short-term memory loss problem, or she's bipolar, or she's just lying. I don't think she's a dumb lady. She's very smart, so she's just lying, right? So, but here's where it becomes bad for America, because let's just say there was a big run on the banks, like larger than just a few. Well, there's no way that America could afford to backstop every single bank in America. They would have to print money like there's no tomorrow, because that's not coming from tax revenues. Tax revenues are down, income tax, sales tax, property tax, all tax revenues are coming down. They're not funding it with that. So they'd have to print money like there's no tomorrow, which causes such inflation that we basically lose our lifestyle almost overnight in that scenario. Or they don't bail out the banks, we lose our lifestyle overnight because of that scenario. The end result is basically the same, because in her statement, what did she just do? She basically nationalized the banks. If she says the government's going to back it all up, well, here's where they have to nationalize the banks, because central bank digital currency is coming our way. This is basically the globalist financial institutions, the G20 nations, the IMF, the World Bank, the World Economic Forum. What do they want? They want centralized digital currency, CBDC, right? So what does that mean? The same people that cause the problem have a solution for the problem, and it's called CBDC. Never trust the person who broke it to give you an answer on how to fix it, right? So they don't care if their system goes down. In fact, they want it to go down because they're bringing in a solution, which to them, to us, this is the worst case scenario. To them, it's the best case scenario, because what is central bank digital currency? Well, it's a digital version of fiat-based money. The money that we all know of right now, it's just a digital version of it. Well, how hard is it to create inflation with paper money? Well, you have to create the paper, you put it in the printing press, they go to the ink, they cut it into the right size, they wrap a little band about it, and then you have a stack of hundreds, right? It takes a lot to create $1 trillion, right? How hard is it to create $1 trillion in digital money? We have some computer nerd guy just sitting there and going, hit a bunch of zeros, hit enter. Oh, I just created $1 trillion with inflation in less than a second and a half, right? That it's easy with that. So that's not going to fix the inflation problem, but they didn't intend it to. What's behind central bank digital currency is complete command and control, fascist type control over your bank accounts. Don't take my word for it. Listen to it in their own words. Dr. Pippa Malmgren at the World Government Forum in Abu Dhabi said, hey, central bank digital currency is coming, and it's programmable money, meaning it's attached to your digital social profile. If you don't follow our directives for what we want, we have the ability to cut you off from buying or selling. Okay, the ability to cut you off from buying or selling with a digital currency. Anybody who's read through the Bible is like, okay, this sounds kind of creepily familiar, right? It's like, ugh. So, but this is what they want. Because what's it all tied to? It's tied to your carbon footprint. It's tied to what church you donate to, what political party you're part of, what kind of food you eat. Do you drive a gas guzzling truck or what? It's like, if they don't like what you spend money on, with the flip of a switch, they can cut you off, right? This is a problem for me, because that's complete loss of privacy, complete loss of freedom, but this is what they want, right? And this is what's coming. So how do we know when this is going to be ready? Well, on March 15th, again, the Federal Reserve Board of Governors came out with a memorandum talking about the FedNow app. What's the Fed Now app? The Fed Now app, view it like Apple Pay or Venmo on your phone, but it's the conduit from you and your money to the central bank digital currency repository, the credit and debit system, where all of your money is, that's tied to your digital social profile. So that was the last missing piece, right? They've got this repository set up, central bank digital currency, but how do you get money into it? How do you pay the people with their credits and debits, and how do people get their money into the system? It's through that tunnel. It's so everything is going to be app based. It's like app based banking. They built the conduit, and they said it's going to be ready in July for mass deployment. July. Okay, so now we've got some specific dates, not from some rogue internet blogger that's saying, oh, I think the date is going to be something, because I know somebody on the inside and they said so. It's like, no, don't ever listen to those people, right? But if it's coming from the central bank itself, the board of governors, and they're releasing it, see, just like a missionary brags about their faith when they evangelize the world, this is their religion on the globalist side, and they're bragging about it. They're not hiding in the shadows. They're not cloaking it in darkness somewhere. They're bragging about it. This is what we're going to do. But when do they release the beta test to the public? Next week, first week in April. They're actually taking 3 or 4 big, massive financial institutions like Wells Fargo, HSBC, Bank of America. I think, don't quote me on the banks, but I think it's like those 3. And then they actually said, hey, we also want any other smaller banks, intermediaries, small community banks to actually go to our website, log in, and start accepting the Fed Now app and pushing it to your customers. So they want mass exposure so they can gain momentum on this thing for deployment in July. So they are wanting all the banking system as we know it to fail, so people will cry out for help, right? Because this is just human nature. Because outside of everything falling apart, where people say, I need your help, just fix the system, I don't care what it costs me. They've got a hard marketing gig in front of them, a hard PR battle, because how many people trust the government?
Almost none.
Not almost none. How many people trust banks? Well, after this, not many. So how many people are going to trust a digital currency that the government-run bank runs?
Yeah, how do they sell? How do they sell this to people? How can they possibly make this look appealing other than through force?
I mean, yeah, exactly right. Especially when the people say, "Oh, and by the way, it's a government-run bank that's digital, where we know everything about you, and we have the ability to cut you off from buying or selling if we don't like you." It's like, okay, it gets worse, right? It's like nobody in their right mind would want that, unless there's a crisis that's so bad that people don't trust the banks anymore. Ooh, well, that's happening. Or we lose our economy, which is happening, right? So about a month and a half ago, when the World Economic Forum met in Davos, what did Saudi Arabia say? Saudi Arabia told the whole world, it's like, hey, we're not going to take petrodollars in exchange for oil anymore. We'll trade oil in exchange for whatever currency partner we're dealing with. So if they're going to sell to China, they'll take the yuan. If they're selling oil to Europe, they'll take the euro. If they're selling oil to Mexico, they'll take the peso. See, the petrodollar started in the 1970s as a mechanism to actually make us the world's reserve currency. All oil settlements traded in US dollars. That had built-in demand for our currency, which allowed us to amass $32 trillion of the federal debt, and people would still want our currency. Well, now that's being dismantled. There is no demand for the US dollar anymore because the petrodollar status is going away. Oh, so people lose faith and confidence in their dollar, and this is economic warfare at its finest from the BRICS nations. They're sticking it to the West and saying, we want to be the world's reserve currency. We're going to start dumping our treasuries. We're going to get rid of the petrodollar. So now you've got all these expenditures. You've got all these entitlements. You have to raise the debt ceiling, which they're talking about on the news right now. And you have no money coming in because there's no more petrodollar. Therefore, you're going to have to print. That causes inflation. Then the policy mechanism to slow down that inflation is raising rates. So I think we're going to have more inflation. I think they're going to continue to raise rates. And it gets worse and worse and worse. So now they've eroded people's confidence in their own economy. They've eroded people's confidence in the banking system. So now what? Now when central bank digital currency comes in like this knight on a shiny white horse and coming in to save the day, right? People are going to say, sweet, I don't care what freedoms it costs me, just fix it. I need to feed my family. I need to heat my house. I need to cool my house. I need to pay my rent or my mortgage, and we can't do it. You got to fix the system. In face of crisis and really bad ones, people will willingly give up their freedoms in exchange for perceived security and peace. It's just human nature.
Yeah, we've seen that a lot recently.
A lot.
Besides looking like, Brazil after their election, or Paris right now, or Israel, or any of those things people are just revolting in the streets. Besides, just a massive countrywide uproar, is there any kind of, reversing this thing?
Well, yeah. So what you and I have talked about is gloomy, right? It's dark.
Yeah.
Oh my word. So I don't want people watching the show to think, oh my word, there's no hope. Don't lose hope. Hope deferred makes a heart sick, right? There is hope in this message. There's solutions where you can invest and actually thrive. That's how God created us. He didn't create us to survive. He didn't create us with a spirit of fear. He created us with sound mind, wisdom, discernment, creativity, understanding. And when we apply all of that, we can be in the right place at the right time. But there's two things that we're talking about here. Number one is investing and thriving when everything is falling apart. But number two is, how do you survive in this new, brave new world, this Orwellian future that's right underneath our nose, right? Well, you have to get out of the system, so to speak, right? So having a tangible asset like silver, you could use to barter with. You could, it's not a digit. You're not some kind of a digital entity in somebody's digital world that they're creating, which makes it easy to control you, because this is what this is all about. If you ever want to control a person, you control what they spend their money on, whether they can buy or sell, then you control them, right? So this is what they want. Well, how do you defy that? Well, there's no doubt in my mind, we will have central bank digital currency, period. They've got way too far down the runway. We're going to get it. Whether we keep it, that part's up to us. Whether we have it is not, whether we keep it is. Just like in a marriage or a relationship or friendship or anything that you give attention and focus to is going to gain momentum. If you want to live like a hoodlum, like a drunken idiot, right? You focus on going to the bars every night, creating as much mayhem as you want, and you're going to get a result from that. You want to focus on living a good life. You read the word, you abide by those rules, you love your family, your people around you, right? And watch what kind of a life that be. You will get what you focus on and what you give your attention to, right? So are we going to give attention and focus and give momentum to a central bank digital currency? That's up to us. Right? It's truly up to society whether it fails or whether it doesn't. But just like when the euro became a currency like 35, 40 years ago, whenever it was, did people want it? No, the Germans didn't want to give up their national sovereignty for an exchange for a regionally traded currency. The French didn't want to give up the franc, the Italian, the lira, the Dutch, the guilder. No. But yet the nature of Europeans is that they cave to political pressure because there's war-torn. I mean, it's nothing against them, but it's war-torn society. There's always factions fighting against for centuries, right? So a lot of times they're willing to give up freedoms in exchange for peace and for political peace. So they gave up their economic sovereignty. It took like 3 to 5 years, but they caved. This time it's different for us. We're not giving up our national sovereignty. We're giving up our individual sovereignty and the right for us to buy or sell individually. It's a much more deep-seated, passionate feeling. And that's why I think the war is going to be way more intense, as central bank digital currency rolls out. So as soon as this happens, you're going to have evangelicals and Catholics all over the world that say, this is the mark of the beast. We're not playing in the sandbox, period. You're going to have libertarians that say, it says spyware on my bank account. They're telling me what I can buy or sell, complete loss of freedom. I'm not playing. And you're going to have every pot smoking weirdo here in Denver where there's this dispensary on every other corner that's used to paying for their pot with cash that now is going to be trackable because it's going to be a digital. And they're going to say, no way, I don't even understand it. But no, I'm not going to do that. I wanted to pay cash for this. So it doesn't matter what religion you are, what politics you are, what your ideology, what your worldview is. Nobody is going to like what's coming, right? So there will be options that come out, right? Like almost from the jump, right? Whether it's silver using for barter, a gold-backed dollar, some kind of other uh, cryptocurrency that establishes itself, quantum financial system. There's going to be many options, and what we decide to choose as a society will be the one that lasts. So the easy way to do it is like, well, A, don't accept it. Don't fall into this beast type system. Well, I would just use silver for barter. That's an easy one until something else establishes itself. And not only is silver good for that, but look what's happened since Biden occupied the White House. Every investment that we have is going to grow or shrink because of policies coming out of DC, right? It's not that I'm against any kind of an asset. We have to make sure that the policies are there that cause growth. And if they're not, they're going to cause shrinkage, right? So what we're seeing right now with inflation, interest rates, all that has caused stocks, bonds, mutual funds to come down, causes gold and silver to go up. So I would invest into silver because in the last 3 years, silver's doubled. It's gone from 1191 to 24. That's over 30% a year. Amazing. Over the last 6 months, it's up like 30% in 6 months. That's 60% annualized growth for a year. That's incredible. So take advantage of the trend. The only way that you can have a successful, maximize your future is to maximize every single day in getting to that future, right? So I don't have to speculate. I don't have to look to the left or right. I just look down. It's like, okay, these are the trends that are right in front of us. And this is how you minimize your risk, maximize your return, gobble up silver. There's one easy solution. Another practical thing that people should do, spread out your assets in your bank accounts because you never know when yours is going to be the next Silicon Valley bank, right? Don't have all of your money in one bank. Whether you have a little or a lot, I would spread it out between a few of them at least. And then thirdly, get out of debt, right? Because as interest rates rise, any debt that you carry, that debt service is going to be ravaging to your lifestyle. So, this just corresponds with what the Bible says too. A borrower is a slave to the lender. Get out of debt. It doesn't matter if interest rates go to 30%. If you don't have any debt, it doesn't directly affect you, right? But this isn't the case for America. We're in debt up to our eyeballs as consumers, as municipalities, state governments, the federal government. Everybody's in debt, right? So therefore, interest rates and the rise of them matters, and it's going to ravage this country in a really bad way. So if you focus on investing into tangible assets like silver to take advantage of these trends, start whittling away your debt, spread out your risk between different banks or credit unions, you're on the right path for reducing your risk and maximizing your return. Then you'll start to have a smile on your face because you've done everything that you can do to protect and preserve and thrive. We're not talking about just surviving here. We're talking about thriving, and this will help get you to that point.
Yeah, absolutely. Are there any wrapping up here? Can you give us some final thoughts, final wisdom, and then plug your firm as well. Tell people about what they can do to find you and the things you can help them with.
Yeah, fear does one of two things, like we talked about. It causes you to not do anything or to make the wrong decision. It's a spirit, kick it out of your life, right? We don't want to be consumed with fear, but make that bold decision, that leap of faith. It's like, oh, I've never done gold or silver before. I don't know how to do it. That causes people a lot of times not to act. Another stupid thing that people tell me is, well, my advisor said that when stocks stink, go into bonds, and bonds stink, go into stocks. So what about when they both stink together? There's no solutions right now other than what we're talking about. Another silly thing that I've heard recently, and well, not just recently, a lot, is we don't want to sell your stocks right now because you're going to have a large capital gain. Isn't that our goal though? Capital gain means you've done well, means your asset has grown. Well, our goal is to buy low and sell high. So you should always have a capital gain. I'm not saying I like paying taxes. I can't stand it, right? But don't listen to an advisor that says, let's just wait for a while for this to come down so you don't have such a large capital gain. They just don't want you to move your money. Right. But if you do that, you lose your growth. Well, that's the reason why you invested to begin with. Don't ever not do the right thing because there's a penalty or a tax. Right, but give us a call. I mean, this is what my firm will help walk you through. So give us a call, 720-605-3900, 720-605-3900. Myself or one of my advisors will walk you through mapping out a strategy for success moving forward. Or you can simply go to my website, click on the button that says contact us and set up an appointment. That's Kirk Elliott, Ph.D.com. Elliott has 2 L's and 2 T's. So it's Kirk Elliott, Ph.D.com. Set up an appointment online or give us a call, and we'd love to spend time with you to put your mind at ease, get you out of the path of this hurricane, and really start to put a smile on your face, even though our freedoms are eroding all around us.
Yeah, well, thank you for that. Thank you for adding the bright side into the doom and gloom, Dr. Elliott. We very much appreciate you. God bless you and the work that you do, and thank you for so much for talking to us today.
You bet, it's my pleasure.
All right, thank you, everyone. Please check out Dr. Elliott's site, and yeah, stay faithful, stay cheerful, and be charitable during these times, even though they are hard. Thank you. God bless.